Now, first I wanted to address a few things before I start seeing any questions come in. And remember, you can send us a question at any time, so just go ahead and use that question pod, send us your question. But I wanted to discuss, I should say, some concerns here that we've had recently. So here on our pods here, you see a watch list. This is my watch list too. These are the current married puts, the 6 married puts that I have open in the Fusion portfolio at Radioactive Trading. Ernie has about 6 or 7 open as well. The Fusion portfolio at Radioactive Trading allows blueprint owners and allows other investors to follow our trades in that limited risk married put strategy and how we apply the 13 different income methods. But over the last few days, we've started to see these sell warnings. We know we've been hitting these peaks here. We've been hitting the highs, SPX, NDX as well. But up here at SPX 62.59, we had a little hesitation today. The VIX had dropped down below 16, which it hadn't been for a while, but it had dropped below 16. It was down in that 1580, 1570 range. But we're starting to see the sell warnings appear again in the market sentiment tool. And that's been a concern for me. I made some adjustments to my married put positions. We're going to discuss those in just a moment. But let's go ahead here on our pod, the market sentiment tool. Let's talk a little bit about what this is. The market sentiment tool is a sort of a view tool that interprets 13 different indicators across the market, mostly focused on SPX, but you've got VIX in here, we've got the trend in here, 52-week stock high and low percentage, stocks above the SMA 20 across the market, put call volume ratio, and much, much more. Now, Ernie tested, this was years ago, it was probably maybe 10, 12 years ago. He tested about 60 different sentiments and watched them historically over time. And what he found is that these 13 indicators gave the best indication of a pre-market movement before the change actually happened. So the put-call volume ratio, of course, this is a contrarian indicator. What we're seeing right now is in the bearish mode. What does that mean? What does that mean? Well, we click on details here and we see a histogram of the total history of the put-call volume ratio for probably more than 12 or 15 years. And what we see is the put-call volume ratio is currently at 0.48. Now, what does it tell us? The market has been moving up. Investors are buying more calls, speculating on market strength and market movement, whether they're far out in time or whether they're near term. And we have this low ratio here of 0.48, and it's bearish when it goes below 0.6. Why is that? Because you can see here, historically, it doesn't really tend to stay below this range very often. It goes back to the norm. What's going to happen to go back to the norm with a put-call volume ratio? Starts to go back to 0.7, 0.75, 0.8. That means more people are now starting to buy puts than calls, and that's starting to even out. So what it's telling us is we've got a lot of bullish speculators in the market right now. We're hitting new highs on SPX and NDX and pulling off of them a little bit, I understand. But at the same time, it's giving us an indication that we're bearish on this because historically, we don't see this continue at these lower levels. Eventually, investors are going to start buying more puts than calls to balance the put-call volume ratio out. And why would they be doing that? Because the market is going to shift. We're going to potentially see a shift. Now, we're in just a regular sell warning now. We're not in a strong bearish sell warning. But our other indicators, stocks over the SMA 20 that have been bullish, we just hit that bearish view. The RSI of the SPX is in strong bearish mode. Number of days that the SPX has been over the SMA 20 is in very strong bearish mode. It's at that peak almost, and we just crossed over the SPX gap of the SMA 100. SPX MACD gap is right about to go bearish. What else did I see here? VIX is not holding it bearish, and again, that percent 52-week stock high and low is about to enter that range. Here we are about to enter that range as well. Now, typically, when I start to see 2 or 3 sell warnings in a row, and if I see 2 bearish sell warnings in a row, that's when I'm starting to take action on my bullish positions. Let me clarify that. I have about 6 married puts, excuse me, folks, open, as I mentioned before. I don't have to worry about those because they're protected. They're controlled risk, some of them, to 5, 6, or 7%. Some of them rolled down with using income method number 9 discussed in the blueprint, and that income method number 9, of course, increased the risk as well. Okay? Now, 15% of my portfolio is in bull put credit spreads at any normal time. And about 10 to 15% is in calendar spreads on stocks that I can't afford to use with the married put technique. Because the married put involves, of course, buying 100 shares of stock and buying a put option, or 200 or 300 shares of stocks, buying a put option as well. Now, if I see 2 bearish sell warnings in a row, typically what I'm doing is I'm selling calls directly on my married put positions, because that's as true to me is a strong indicator that the market's going to pull back. When I start to see multiple sell warnings in a row, I'm starting to lighten up on my bull put credit spreads, close the ones that are profitable, and maybe convert to bear put debit spreads that are 30 to 45 days out in time. Also, I may start buying calls on the VIX in this case, because we're seeing these sell warnings now. They're lightening up. It was at 7 here, back on 7.3, jumped up to 6 yesterday on 2 days ago on 7.9, and we're down to 5 bearish and 8 neutral. No bullish indicators. We're ramping up to those highs. We're hitting those highs. It's giving us an indication of concern. So, per that discussion, how I'd manage my portfolio now that I'm seeing these, I'm lightening up on the big bullish moves. We know we have a lot of earnings coming up. We know we have a lot of things. Aaron had a first question that came in, but Aaron's second comment was, you forgot to include Trump in the Market Sentiment Tool. And that is true as well. But it's not just about the administration, the policy, and the big, beautiful bill that came out. It's also about the minutes that were released from the Powell discussion. It's still about global conflict that's going on. The Houthis still are now, again, launching missiles and sinking various freighters and other tankers and things of that nature. New policy on Ukraine and Russia. And, of course, the global supply chain and the tariffs, Aaron, as you mentioned. Yes, this whole week of the notes going out, the letters going out, I should say, Aaron, my apologies, to the different countries about the tariffs and everything like that. So there's a lot of economic flux going on. There's a lot of economic uncertainty. There's a lot of global uncertainty, and that is affecting various things. There's also a lot of earnings coming up, and there's a lot of discussion of, hey, the Mag 7 stocks, we're seeing AMD. I include that in the Mag 7. It's a Mag 7 Plus. We'll have a discussion on that. I did a full analysis, another full analysis over a 7 to 10 day period on the strike of pain tool, the pitting tool, based on the max pain calculation on my stocks that I'm trading in my portfolio for the married puts, which are more lower volatility, the Mag 7 Plus stocks, and the dividend aristocrats. So you guys are going to see that soon, how the strike of pain tool, one of our signature tools based on the max pain calculation, plays out over time. But yes, there is a lot going on. So with that in mind, I just want to say, okay, so recently we've done some new trades with the married put, even with all this going on, with the radioactive trading techniques going on. Now, Alamos Gold was just opened 9 days ago. We opened this on July 2nd, 2025. Initially, we bought the December 27 put right at the money, but the stock moved up. AGI, Alamos Gold, I went to a gold position for safety. And let's take a look at that chart there. Let's take a look at big charts there from 7.7. So we got it. Sorry, folks. We got in the position here on 7.7, as I mentioned, about 26.95, and it went up to 27.50, 27. Well, we rolled from that 27 put up to the 28, and then we sold the 28 call. for about 47 cents. It's now down to 18. I know that looks like small numbers, but the percentage is what's important. That helps reduce the risk a bit, and it increased the potential return if the stock's trading at that price. Now, even with the stock down 1.2%, with this movement just in the last 9 days, we're at a 1% profit on this position. That's not my target goal for this trade, but we're looking pretty good there. We're looking in the green, even with the stock down, by buying the stock, buying the put, rolling the put, following the rules in the blueprint, and, of course, doing another income method, selling income method number 1. Caesars was just 18 days ago. The stock is up 7%. And we did sell a call here at 56 cents, the 31 strike. We have the 31 put out to January 2006. And we're looking at a small profit of 1.2% in 18 days. But this is one of the stocks, this one and Planet Fitness are the ones, I'll be honest with you guys, that are confusing me. And what I mean by that is, oh, no, that's not the profit and loss chart. Well, that's where we are right now. The stock is here. It breached. Caesar breached 31 yesterday, as you can tell, and dropped another $1.50 today. Planet Fitness has been the same way. Planet Fitness dropped when CZR went up, and then today Planet Fitness is up 215 to my 110 strike of the call that I sold. It has 7 days left to expiration, I should say. But this was the very, very interesting part that I wasn't too clear on, and I didn't want to roll the call. So as I mentioned, we sold the 31 call because we have the 31 put, and the stock went up to 31.50 yesterday. But I didn't want to roll the call yet because I was seeing those sell warnings. I'm thinking things are going to pull back, and this one absolutely did. And so now we're back in the green zone. Want to let the weekend time decay work in my favor. Maybe buy it back next week sometime. But I think a lot of this weirdness here, I don't want to say weirdness, my apologies, folks. We don't use that terms when we talk about our investments and our trading. But this movement specifically, I think up from the 29.50 range up to the 31.50 yesterday, was when some of the information came out about the recent quote-unquote big beautiful bill came out and the extra tax on gamblers. And that pushed Caesars up because that means that Caesars is likely to make more money. Not necessarily. Now gamblers are going to pull back. They might not be using the tool as much. But somehow with that thing that's in that new administrative bill that came out is the tax on the gamblers. And that pushed Caesars up. And then today, people, I think, started to digest the information, and it came back down. This wasn't earnings. This wasn't any other news that I saw. Personally, if any of you have any recommendation or anything you saw in the news on the gambling sites, DraftKings, Caesars Palace, anything like that, let me know. But that was so bizarre that it pushed it up, and then it just came back down. But hey, I'm happy with it because I'm in the green zone. I'm not above my call strike price on the married put. We're now back below it, still looking in a good position. Planet Fitness was the exact opposite during these last 2 days. When Caesars jumped, Planet Fitness kind of moved up a little bit, but it had dropped the 3 days before, right in this 105, 106 range. I'll be honest with you, greed, folks, it takes control. I could have bought that 110 callback I have for next week's expiration at this point for about 75 to almost 80%. It didn't hit 80% profit, which is usually what I'd like to do to buy my calls back, my sold calls on the married put positions, cash secured naked puts on those positions as well. It didn't do that, and now it's sprung back up. And you see, it's been doing this. It springs up, comes back down. I've been in this 110 call this entire time, and it's driving me wacky. I know you guys have these experiences as well with your trades. Okay, so yeah, I sold the 110 call up here. Oh, it breached 110. No, I'm not going to roll it yet. Okay, it comes back down. Good. Oh, it spikes back up to 110. No, I'm not going to do. Okay, it comes back down. I'm good. Got 8 days, 9 days, 12 days left to expiration. We'll let the 110 call expire. Not quite at my 80% buyback cost yet. And then here we are 2 days later. We're right back above 110 now. But I'm seeing the sell warnings. I'm seeing the market sentiment tool tell me that things are likely going to turn. and likely going to pull back. And that's why I'm leaving. I haven't rolled my 110 call yet on Planet Fitness for next week. I'm going to let it play out. I'm going to let it do it that way. So that's what I've got. Some of the radioactive trading recent positions. The on trade, even though we're down 11% on the stock since our original purchase price, we're up 7.2% following the income methods. Lifetime doing better. It's getting back to my 30 strike where we rolled down the put to. I want to sell a 30 call, but I'm afraid it's going to jump back up. And this one only offers monthly with 5-point strike differences. So there's not much in the 35 call. I don't want to sell the 30 because I don't want to get it breached. I'm seeing signals there on the technicals with the MACD and others that I think LTH might be up at 31 or 32 in the next 10 or 14 days. And Kraft Heinz, safe play, 161 days ago, back on January 31st of 2025, got 2 dividends, did 2 income methods, rolled the put down once or twice and sold a call. Not doing what I want, but that's okay. We're going to hold this here. It's at 27.14. It moved up nice today. I'm holding the 20. I know that looks small. I'm still down 9% on the position, but right now on the married put, we're only down 2.5%. It's looking prime to sell a 27.50 call or do an income method number 6, as discussed in the blueprint as well.